Hello Forex traders, welcome to this video analysis brought to you by Admiral Markets, where I take a look at the potential explosive start of the last month of 2014 as we roll into December. Before we take a look though at the charts in euro dollar, pound dollar, dollar yen and AUDUSD to be specific, first of all though, this disclaimer intending to explain the fact that this video is intended for the global audience here. Please take a look at admiralmarketsglobal.com, select your country of residence and contact an appropriate entity to find out more about the details and conditions. Also, please be aware that trading for exchange is considered high risk and it may not be suitable for everyone. To get more information on that, also contact admiralmarketsglobal.com, but you should be aware that by continuing watching this webinar, and a video I should say, you agree with the disclaimer and the fact that trading for exchange is high risk. With that said, we can move on to take a look at the schedule of this week, the webinar schedule here. Nenad is going to take a look at the weekly FX recap on Mondays, as always. Very important to take a look at that. Then Tuesday, Wednesday morning, we have live trading labs and Forex strategy. And on Wednesday evening, expert advice, vital info on stop hunts. And Thursday evening, we have the future of technical analysis. Is it hot or not in the evening? So good lineup again, for instance. So join us in any of these webinars. Hope to see you very soon. Now with that said, we can move on to take a look at the charts. Let's take a look at the euro dollar. This is the 4-hour chart. And what I'm looking for, because the euro dollar definitely is still in a downtrend, despite maybe the price going more sideways the last few weeks, as we can see here on the 4-hour chart, it's just basically bouncing between 123.60 and 126. We did have a recent big fall that would indicate a pretty bearish momentum. So what I'm looking for is that momentum to continue, and that has a high likelihood if price is able to break through the support level, the bottom of the green two lines there indicating actually a triangle formation. So if that triangle formation breaks to the downside, I am interested and will probably trade the short to the downside on the euro dollar. Now as price breaks up, I'm not too interested because it is a downtrend. So in that regard, the upside I think is limited lifespan. And in fact could probably have some struggle here at the 78.6 and the 88.6, the 88.6. So we're looking at these two fibs, in my opinion, for a turnaround reversal back down. So either the breakout to the downside, or if it does break up, I'm going to skip the breakout to the upside and look actually for a false break and a turnaround at these fibs for more downside. All right, so that's my my trading plan here for the euro dollar in this week. Now the target is the minus 272 target at 122, 123 in fact, and the minus 618 target closer to 122. So those are the main two targets. Stop losses, in my opinion, if it does break out, I'll probably put the stop loss above here, or even the wider one above 126. If I use the fibs, of course, then I'm using the 126 level as the guarding spot. Basically, just one more time here, as long as price stays within this trend line here and stays within this downtrend, then I don't see any reason to look for anything else but the downside at the moment. Of course, if price breaks above the 126, then something else is going on, and perhaps the euro dollar is then reversing. So this is what I've been saying in the trading room on Tuesdays, Wednesdays. We have the trading room looking at analysis and strategy. So join us then if you like. And this remains still valid for the euro dollar for the first week of 2014, the first week of December and the last month of 2014. The pound dollar 4-hour chart now basically has the same structure as euro dollar, but one of the differences is that the price already broke through the support line here, the lower green line, and is already breaking out to the downside. So there's just a small structural difference here. Both are bearish though, both are in downtrends, and you can see pound dollar here neatly below the green upper green line here, indicating the downtrend slope. So what am I looking for a short? Because we're in a downtrend, I'm only going to trade at this moment still with the trend, unless I bump into really big support levels. 155 could be such a level. It is a psychological round level, but it could fall even lower. Price could go to 153, 150, 250, 150. The downtrend, we don't know exactly how far it can last. But if you look at the weekly chart, one of the levels, of course, that we want to be careful of is this bottom here, closer to 150 at 148, or perhaps even if we put a fib like this from the swing high to swing low, we might want to be careful of 153.20, 78.6 fib, 150.80, 88.6 fib. So those are things to be careful of. Anyhow, back to the 4-hour chart. So what I'm looking for is a pullback to the 50 or the 61.8 fib, and looking for a price action candlestick pattern confirmation that price is stopping at those fibs and respects those fibs either by a wick or some engulfing twins, and looking there for that confirmation for downside, and we'll take that trade. Not taking a pending order, just waiting for some confirmation through candlestick patterns, and if I do see that, then price is giving me the green light to take a short at these zones. The same, by the way, would be valid for the euro-dollar 4-hour chart, where I'm taking a look at how the price breaks through this trend line. When it breaks, I want a full candle below it. Also, I want to see candlestick patterns at these fibs, the 888.6 and the 78.6, as well as the pound dollar. All right, next on the menu is the dollar yen. The dollar yen is in a big uptrend, and I really appreciated this dollar yen a lot with the good number of trades it offered to the upside. And the dollar yen had that last week too. I talked about the upside continuation last week, so hopefully you got some good pips on the dollar yen. And but now it's a bit different. Now, price is hanging around the previous top. It is getting very close to the 120 psychological round resistance level. So I think it's a bit more difficult to trade. I liked it a lot last week. I think I mentioned it here. So if you did take those trades, just let me know in the chat or in the webinar, for instance. But now it's a bit more tricky. We have a bit of a wick here. We have this top close by. So I'm not big a fan of it as yet. If we do push through 119, there could be some intraday space up to 120. So first 119.50, then 120. But of course, the closer we get to 120, the more cautious we have to be. 119.90 could be the turning spot as well. It doesn't have to go exactly to 120. So it is a beautiful uptrend. It's even a very nice uptrend channel. It has a tremendous speed in the last weeks. It accelerated here on the end of October, 1st of November, and then steadily continued. So a big fan of it, just a bit more cautious because of the resistance close by, and would not take any position trades anymore. I don't think there's enough space for that, for taking a trade for a lengthy period of time, because it already has traveled, don't forget folks, has already moved 1,400 pips in a relatively short time. So maybe an intraday trade this week up to, as I said, 119.50 or 120. Then last but not least, the AUDUSD. We are looking at the weekly chart now, and the reason why is specifically because of the fact that last week had a very good close below the support. Finally, that break happened. Of course, price made a bounce here at the double bottom, in fact, then moved up for 4 weeks, tried to break again, but failed ultimately, didn't have enough steam, went sideways again for a few weeks. So it was having a lot of trouble here breaking this 86.50 level. I mean, weeks and weeks and weeks, price is just hanging around it. Last week, finally pushed through the magenta support line, finally managed to close below it, and not only that, but close very near the low, indicating good bearish control of that week, of last week, plus a whole candle below it. So I like that that bearishness on the Aussie. It takes away all the doubt it had at the support level. So I am looking for downside continuation. Now price already gapped down a bit and is moving lower. So for position traders, swing traders, you might want to wait for a bit of retracement here before trading it, right? But if we put some trend lines on and some fibs, let's see what we can get out of this AUDUSD 4-hour chart. So if we put fibs on this chart, we can see that at this moment, probably this fib is the most likely fib here. Anywhere like this or like this, one could use. And the target, the main target, probably even lower at 83.20. I mean, price could go lower, don't get me wrong, could even go to the lower 80s eventually. For the moment though, it looks like any retracement back up into this zone right in here between these magenta lines, I'll move this one a bit lower, right in here would be a retrace back to resistance, right? So we could even move this fib from here to here, and looking for any retracement that could challenge the 85 level again, right down there, 85 up to 86 would probably be a good zone for me to look for shorts, right? So also even the closure of the gap right in here. Yeah, that's 85 in fact, sorry. So 85, anywhere 85, 86, probably 85 is already a decent discount. Would be a good shorting zone. Also here, one could wait for candlestick patterns, what I normally do. And the target will be 83.60 or 83 for the moment. That's a decent target, nothing too fancy. And the stop loss above this top here at 86.15, which should be relatively safe to survive any pullback. That wraps up the video analysis of today, the 1st of December. Don't forget that because the December has started, November will offer, of course, a ton of monthly candles. Don't forget to take a look. It's always good info that the candle provides. Hope to see you in one of these webinars this week. Looking forward to that and wish you all good trading. Cheers.